Imagine opening the news tomorrow and seeing a headline declaring a single private company has reached a valuation of $3 trillion. This chart compares a $3 trillion valuation against the gross domestic product of major nations, overtaking entire developed countries. Pulling back to see the global economy trailing behind raises an obvious question. Why assign national-level wealth to a rocket business? To make sense of these numbers, we have to look past the launchpad. The market is pricing in an entirely new infrastructure for the global economy. A $3 trillion valuation doesn't mean a company holds that cash in a bank account. It means the market believes the company will generate that much value over time. Think of it like buying an empty plot of land. Today, it might be cheap dirt. But if you have absolute certainty that a densely populated, high-tech city will be built directly on top of it, the price of that dirt multiplies overnight. Investors are applying this exact logic to aerospace. They are paying for the rights to tomorrow's economic ecosystem. For decades, space exploration suffered from a severe financial bottleneck. Rockets were used exactly once, burning up millions of dollars of hardware on every single trip to orbit. Imagine purchasing a brand new commercial airliner, flying it from New York to London, and then immediately throwing it into a scrap heap. The cost of a ticket would be astronomical. SpaceX solved this exact problem by engineering reusable rocket boosters that return to the launch pad intact, ready to fly again. By collapsing the cost of reaching orbit, they eliminated the primary financial barrier to space. This structural change allowed their business model to rapidly expand. Cheap, repeatable launches meant SpaceX could stop relying solely on outside contracts and start hauling their own proprietary hardware into space. They deployed Starlink, a sprawling constellation made of thousands of individual satellites designed to beam continuous internet access back to the surface. This provides immediate connectivity to isolated populations, from remote mountain villages, isolated desert outposts, and cargo ships at sea. This creates a global, recurring subscription revenue stream. That massive influx of steady cash is designed to fund their long-term capital-intensive ambitions, like interplanetary transport and establishing a permanent human presence on Mars. Starlink turns a transportation company into a global utility provider. That continuous revenue engine drives the massive valuation metrics we see today. The moment investors saw this model working, capital flooded into the market. Competing aerospace startups and satellite manufacturers suddenly received massive funding to try and keep up. This influx of money immediately accelerates secondary sectors. Artificial intelligence systems require orbital data, software design adapts to satellite networks, and advanced electronics manufacturing scales up. This hardware requires human labor. Demand surges for highly skilled engineers, software developers, and advanced manufacturing technicians. High-paying jobs strengthen the global supply chain and drive consumer spending. As one dominant company expands, hundreds of secondary suppliers grow alongside it. The $3 trillion price tag is a specific bet. Investors are wagering that this company will remain the central hub of this expanding secondary economy. You might be wondering why any of this matters to someone who doesn't build rockets or buy individual stocks. Modern life relies on orbital infrastructure. Every time you use GPS navigation, check a weather forecast, complete an online banking transaction, or rely on disaster management systems, you are pulling data from a satellite. When the cost of putting hardware into orbit drops, these critical digital services become faster, cheaper, and more reliable. The true product being built here is the invisible digital backbone running modern society. However, these astronomical valuations carry immense risk. Pricing a company this high means investors expect flawless, continuous growth. History has shown that markets can become emotional. Prices sometimes rise much faster than reality. Is the valuation based on real business growth or only on excitement? If growth slows, or if rival private firms and heavily funded government space programs capture market share, that valuation can contract quickly. Ultimately, whether the market cap holds at $3 trillion is a secondary detail. The facts show they successfully forced capital and engineering talent toward highly ambitious technological goals, pulling human infrastructure further beyond the atmosphere.